A Random Walk Down Wall Street by Burton Malkiel. Summary of each chapter. Chapter 1. Firm Foundations and Castles in the Air. In this chapter, Malkiel introduces the concept of investments and discusses the two types of analysis used to make investment decisions: fundamental analysis and technical analysis. Chapter 2. The Madness of Crowds. Malkiel discusses how the stock market is influenced by emotions and how investors often make irrational decisions based on the behavior of others. Chapter 3. Stock Valuation Ratio Analysis and Market Timing. This chapter covers the various methods used to value stocks, including ratio analysis and market timing. Malkiel argues that these methods are unreliable and that investors should instead focus on building a diversified portfolio and holding it for the long term. Chapter 4. The Biggest Bubble of All. Surfing on the Internet. Malkiel discusses the internet bubble of the late 1990s and how investors were caught up in the hype of the new internet companies. He argues that investors should be wary of getting caught up in market trends and should instead focus on long-term investment strategies. Chapter 5. Technical Analysis. Malkiel discusses the concept of technical analysis, which involves using past market data to predict future market trends. He argues that this approach is unreliable and that investors should instead focus on a passive investment strategy. Chapter 6. A penny saved is worth more than a penny earned. Expenses matter. In this chapter, Malkiel discusses the importance of minimizing investment expenses, such as brokerage fees and mutual fund expenses. He argues that investors should seek out low-cost index funds and avoid actively managed funds that charge high fees. Chapter 7. The Bond Market. A Preview. Malkiel discusses the bond market and how it differs from the stock market. He argues that bonds are an important component of a diversified investment portfolio, and that investors should consider investing in a bond fund. Chapter 8. How the Pros Play the Biggest Game in Town. Malkiel discusses the strategies used by professional investors, such as hedge fund managers and mutual fund managers. He argues that these investors often underperform the market, and that individual investors should instead focus on a passive investment strategy. Chapter 9. Behavioral Finance and the Role of Psychology. Malkiel discusses the role of psychology in investment decisions and how emotions can often lead to irrational investment decisions. He argues that investors should be aware of their emotional biases and should adopt a disciplined investment strategy. Chapter 10. A Practical Guide for Random Walkers and Other Investors. In this chapter, Malkiel provides practical advice for investors, including the importance of diversification, minimizing investment expenses, and avoiding market timing and stock picking. He argues that a passive investment strategy is the most effective approach for individual investors.